Hey traders, Nick here, after hours on Tuesday 4/19. You're looking at the disaster that is Netflix. This video is not about Netflix, but I'll start there with a PSA. First of all, luckily, before the close, live with the people I'm sharing my screen with, which are, I think we're 245, 255 people today. I looked at the data that was available from the options and from Tradietics. It's a company that has a pretty good tool out there if you haven't checked them out. I'll put a link in the description below if you want. It'll give you a discount for them. Anyway, my guess was down. I didn't think it would be this big, but I did two things. I said the direction looks down even though there's still a lot of coin flippish element to it because nobody knows how people are going to react. It's an emotional thing. But based on the options, I was confident that down was a much better move. So also I combined it with all day and yesterday and over the weekend. The video recap over the weekend was that I'm concerned about Netflix. They could tell a bad story and they would lose their burrito, is what I meant by comparing it to Chipotle. So when Chipotle had, before the big crash in Chipotle, their ace was turning comps. And then they unfortunately had the sicknesses from their food. They lost their ace. The comps could not come when people are getting sick from your food. And the stock got shellacked. So I'm saying don't double up on Netflix, in my opinion. In my opinion, that's not telling anybody what to do. The downside technically could be below 200. Could be. Not going there. This is not me saying it's going there. I'm telling you there's a possibility it could be there. If you pull up a longer time frame chart, they're losing a neckline of a giant, I don't want to call it head and shoulder-ish pattern. So basically it's right here now. What happens on the pop? If it gets sold and they lose today's low, they're most likely going below 200, 180, something like that. That's not my forecast. I'm just telling you how it could happen. They're selling rallies. They're not stopping. That aside. Okay, so what's today's video about? Today's video about listening to all kind of clues, and today we did that with the IWM. So the IWM is the ETF for the small caps. We did that in the SPY, in fact, as well. So we were long going into today, so we weren't upset about the rally at all. I just didn't want them to make the secondary move that they tried to make at the last minute. I thought that would be ridiculous, and they tried and then failed. So at one point, I said, let's look at the internals. I'm going to show you what divergence means, actually. I said IWM, but it's easier to see in the SPY. So this was a move I didn't want to see. I thought it was wrong. And in fact, up here, I said, let's buy some puts. Which puts to buy? 441s, I want to say. Anyway, they were 52 cents at... after the bell rang, they were about $1.15, $1.11, $1.10, $1.15. If you don't believe me, I mean, don't take my word for it. Here's somebody else's word for it from the chat room. So this is a picture of the chat room today, and hopefully you can see it. Anyway, they bought puts on my mark. 100% in less than 20 minutes. That's crazy. That was their comment. I said, well, how much are they? They said 11. So they booked them at 111. Whatever they bought them, they booked them at 111. And the statement was, for me, this is my screen, them watching it, and I took a screenshot of it. Was actually, I'll leave it here somewhere on the side. So what gave us the clues? A couple of things, but the easy part is the divergence. So what is divergence? When price is rising, the internals should be rising with them. And then it comes to a point where price is making higher highs and the internals just continue to falling. So they just went different ways. Divergence. One's going one way, the other one's going the other way. It happens every once in a while, but usually they should be in tandem. Look, price drops, the internals drop. Price rallies, the internals rally. Price drops, the internals drop. Price rallies, the internals rally. The internal starts to fall. Price continuing to go. Hey, party! And I said to buy the puts here, somewhere. It did this. So I said, book your profits however you want to. And then it did this. And here's the golden ticket. I said, what is this all about? Look, I had the arrow here. It played out almost to my arrow. Because I looked at the puts. Those same puts that were 52 cents to open up here were 70 cents to close up here. So when your puts gain on a rally, the market makers know they're going to pull the rug from under you. There was no explosion in the VIX. There was no implied volatility explosion on the SPY for whatever reason. It's not like it was reporting earnings or anything. It was just pure price action manipulation to grab the bulls one more time. And then boom. This is what happened after hours. This is what happened into the close. So you can't blame this on Netflix, only this. So cues. Two things. One, look for divergence. Two, look for clues, unusual clues. Get educated on those things. It's not too tough. I mean, it's tricky to find the divergence. There are programs out there that offer you divergence for free. Or you can just train yourself to look at it here and there. So this is the main part of what I wanted to share today. Now, throughout the day, we had pretty good calls. I'll show you a couple. I found a picture I posted in the chat room as a static picture showing the divergence. I drew a line. I said, look, I physically showed them the divergence. Okay, so that's one. Put that to the side. We do this all day, by the way. Within 5 or 8 minutes, I drew this picture and posted it in I said they're going to bounce. If they bounce, they'll do a right shoulder. If they do, otherwise this is a leg to hold short term. Because of the divergence, this could play out, right? And I said basically these are the candles that I don't like, and I pointed to this area right here, and they overshot my arrow right there. That's my arrow, same arrow, see right there, and they went to where I would have pointed. Okay, so that's another thing. And then I left them with a picture of the the lines to watch for the IWM into tomorrow's open. And they were these. I said the downside scenario would play out to here. If it does, and they're halfway after hours. But I also prepped them for the rally up there. It's not like I'm taking both sides of the fences. It's important to know where the lines are, because that's where the trades happen. Not guessing where price is going to go, but chasing a target once you have a clue. So if you're in here and you buy calls, you're just guessing. If you're down here and you buy puts, you're too late. If you're down here and you buy puts, okay, now you're chasing something. If you're down here and you buy calls, okay, now you're banking that support will hold. This way you know to stop out. So without lines, how the hell do you trade? If you're trading fast and you're not doing something like this, where you're tracking, 1 minute, 30-second chart, 5-minute chart, looking at this one, by the way, played out perfectly. We saw that coming. By the way, these two things, I drew them and pasted them, and they developed exactly how I said they would, because we were chasing harmonics. And I'm not an expert on harmonics, but I sure do know how to trade them. I don't know how to draw them, but I have a tool that draws them for me automatically, and all I have to do is just use it after the fact. Knowing how to use the tool is the better thing than to... It's not a trade alert. It just says, go look for a short. I thought it would happen here. It didn't. It went a little bit higher, and then it came back down to my target, which was here. So anyway, you need tools. If you don't have them, join a group that does have them. Here is that thing here. That's the image I shared statically in the chat room. Same chart. There we go. They bounced here, bounced. They were up here. So they bounced here. They were up here. I said this is a potential because of this harmonics. Look what happened. That's where they got to. That's where I thought they would go, and by the end of the day, they went here. So this last burst, the market makers tried to draw as much call prices as they can from the rally. If somebody held out all day, I'm going to buy the rally, I'm going to buy the rally, I'm going to buy the rally, and then late in the day, this happens, and go, okay, screw it, I'm going to buy the rally. Boom, grab them. So you need this kind of information. That's it. Hopefully this helps. I will post it. I won't tag a $sign because social media says, well, you didn't post it beforehand, you can't tag it, even though it's a damn good lesson for people to learn, at least to see how things happen. So if you're trading inside the day thinking you're going to do well, your opponent is using all kinds of tools. So even I feel with all these tools and 250 sets of eyeballs in there, I feel like I'm missing a piece because of the market makers. They're so skilled, they don't lose. They're out there to screw us. And if you don't realize that and get as many tools and friends as you can, you're at a disadvantage. That's why the Reddit thing works, because so many people looking out for opportunities and pitfalls that you make fewer mistakes and you grab more opportunities. Today, somebody in the chat room, Ryan, I think, somebody asked Ryan, who was an active contributor in my chat room, what are you doing with Netflix? He said he was buying puts. Which puts are you buying? The 290. The 290. Can you imagine how much money they're going to have tomorrow morning on those puts? The collaboration in the chat room happened. I didn't even have to say a thing. All I had to do is say it looks like it's going to go down. That's it. And then the situation was they bought 290 puts. They cost them pennies compared to what they're going to be worth tomorrow.